If you want to make money in trading, then you need to stick to the end of this video, because I'm going to show you the single most important aspect of trading. And if you don't know this one thing, then you're probably not going to go very far in trading. Understanding what I'm going to show you and teach you in this video will drastically improve your trading. So pay attention and let's get into this video. First, we're going to look at what is market structure, and then we're going to look at how to identify market structure. So market structure is basically how the market is formulated, how it is structured, how it is formed, how the market moves on a day-to-day basis, week-to-week basis, or month-to-month basis. So understanding market structure is very important so you guys can know the direction of the market, because with market structure you can easily predict the next move that the market is going to make, basically. So for example, if the market is structured in such a way that if there's a price point here, that anytime the market reaches there, it reverses. So that basically is market structure. So you, with that knowledge, then you know that anytime the market reaches that zone or that price point, that you can expect a reversal. That is the use of market structure. So basically, there are three ways the market are structured, or the market is structured. First is sideways, right? So the market is structured so the market is either going up, or it's going down, or it's moving sideways. It can't go any other direction from there. It's either going sideways, up, or down, right? So the sideways movement is called consolidation, and the upward movement is called uptrend, and the downward movement is called a downtrend, right? So I'm going to show you guys how to identify market structure. So here's how to identify market structure. In an uptrend, what makes an uptrend is the market comprises of highs and lows, right? That's how the market is structured: highs and lows. And an uptrend is defined by having higher highs and higher lows. And then the downtrend is opposite of that. So the downtrend is comprised of lower highs and lower lows. What I mean by that is, how you identify an uptrend is when you have a high here. So this is the high of the market comes back down, then you have higher highs like this, higher highs. So each time price keeps making higher highs like this, that's your uptrend. Not only that, it has to also make higher lows, right? So when it creates a high, it creates a low, and then it goes and breaks that high and forms a higher high and higher low, higher high, higher low, higher high, higher low, till the market wants to reverse. And when the market wants to reverse, it basically goes back to that high, fails to break that high, respects the high, and then comes back down, breaks all these lows, which is called break of structure. So this break of structure indicates that the market has changed direction, and now we can expect the market to begin to trend downwards, to change the trend from the uptrend to the downtrend, and also inversely, right? So but a sideways market comprises of just zigzag movements of undefined, irregular sideways movements of highs and lows, right? So you can get lower highs, and then you now have higher highs like this. Like, it's just staggered and irregular. So this is consolidation. And when you have a consolidation, then the market is not really going anywhere. It's just moving sideways, and then you can expect a big move out of that consolidation zone, right? So I'm going to show you guys examples of that. So here we are on GBP card on the 1 hour chart. Here we have the market trending upwards. And what do we have as the market is trending upwards? How do we know that this is an uptrend? Well, because we can see the market was going down initially, forming. So this is a high, this is a low, right? This is the low, right? This is a lower high. You can see market breaks this structure and forms another low. This is another high, lower low, and then forms a lower low, right? You can see from there the market goes up and breaks this high and continues up. So now we have this break of structure, then we can expect the market to continue up because it does broke structure. As it broke the structure, we can see that they continued up and it formed a lower high, a higher low, and then went all the way up, broke the structure again, giving us a higher high, and then from the lower low, then went all the way up there from the higher high from the lower, a higher low, and then you can basically see price came back all the way to this price point, to this high, failed to break the high, and then comes back down and breaks this structure right here. So now we can expect the market to begin a downtrend, right? And then we can see that it forms a low, forms a high, goes all the way down, forms a low, forms a high, goes all the way down, forms a low, and is about to form a high, right? So that's basically how the market is structured. If you understand this, then you can understand how to predict the market. So you know that once the structure has been broken and then you expect an uptrend, then you know that price has to pull back to a certain point. Then you can use, if you not use the Fibonacci, you can use your Fibonacci retracements and get your zones, and then basically take entries from there. There are so many ways to trade market structure. You can with enough backtesting, you can know what and when to look for continuations and we look for reversals. So in order to identify the trend, we usually most traders usually draw trend lines. So the way that works is you connect the highs, right? You connect the highs like this, and then you copy and paste that same uh trend line and put it on the lows, right? So you're connecting the highs and you're connecting the lows. That gives you the direction, gives you the channel. So you can, in this channel, you can see that price keeps on bouncing up and down like this. That tells you that that's the downtrend, and then you can basically take trades all the way here, and you would have lost here, but price still eventually went back down. So that's basically market structure. So if you guys enjoyed the video, if you guys found this video helpful, like the video and subscribe, leave a comment, and let's get to this.